When we small business owners have uncertainty about our businesses, it creates fear and overwhelm. With fear and overwhelm comes a loss of control. We have no clarity about the future. We fight fires every single day, and we use gut feel to make business decisions. We stay up nights worrying about whether or not we're going to make payroll. We stay up nights worrying about whether or not we're going to get new business, and if we get new business, are we going to do it profitably? We stay up nights worrying about whether or not we can pay our personal bills and what we're going to tell our spouses when we can't. We stay up nights worrying about what could possibly go wrong next, and we fear the embarrassment, emotional, and economic loss associated with total and complete failure. On the other hand, when you have control over your business, you have clarity about the future. You know what tomorrow will bring, and if tomorrow takes a different turn, you know how to handle it. You have the right tools and the right information to make the right business decisions. And you have all the contingencies covered. And as a result, you're able to enjoy more profit and income, pay all of your bills, have no more challenging discussions with your spouse about getting another job, and at the same time, increase the value of your business. In short, you have a business that works. My name is Michael Barbarita from Next Step CFO, and at Next Step CFO, we are a contracted Chief Financial Officer services firm. And we are providing services and producing information products that give clarity and control to small business owners, helping them make the right business decisions that lead to multiple six figures in profit and income and seven figures in business value. With over 30 years of experience in actually owning retail, manufacturing, and service companies, I truly understand the risks and opportunities of business ownership. And over the last 10 years, I've been providing clarity to small business owners through business and cash flow forecasting, key performance indicators or metrics, and business ownership experience. In this short video, and the free short videos that I put together for you available for download, I'm going to show you how to gain more clarity and control over your business, as well as helping you make better business decisions. I basically answer frequently asked questions by business owners, as well as questions that business owners should ask. At the end of this video, I'm going to show you how to get those other free videos. So sit back and enjoy. In this video, I'm going to talk about inventory purchases. Here is a checklist for choosing a supplier. When considering what supplier to purchase inventory from, the following is what needs to be considered, and it applies to all types of businesses. And certainly there might be one or two points here that do not apply to your particular business. But by and large, every point here does apply to just about every business in every industry. Number one, of course, is price, which you probably already know. Secondly is price breaks. So if there's certain quantities that you're purchasing, if you're purchasing 100, you should pay less per unit than if you're purchasing one. Also, you need to know your terms. You need to know freight costs and who's paying them. You need to know what the turnaround time is once you order product. You need to understand what minimum quantities that have to be purchased. How does the vendor stand by their product? So if the product is defective when it gets to you, or if it's defective when the customer uses it, how does the vendor stand by their product? Restocking charges. If you return product, are you charged a fee? I hate those. I never pay those. And if a vendor is going to be a stickler on it, I will never do business with that vendor again. Also, how efficient is the product to handle? That's very important. You want to make sure that when you receive product, you're able to handle it efficiently so it gets into the distribution system efficiently, so it gets into the customer's hands as quickly as possible. How efficient is the product packaged? How efficient is the product to use? Is the customer going to have a hard time using it? Are we going to have a hard time handling it? What type of support are you getting from the vendor to help sell the product? This is incredibly important. Many times we business owners forget to ask for advertising money. Many times companies offer co-op advertising, but we never ask about it. And just because somebody has a co-op advertising program doesn't mean you have to follow it. You can negotiate, probably a better deal. And if a vendor does not have advertising, you still ask, because they could create a program just for you. I used to get $10,000 per supplier for advertising. And it's not because that was the program that those vendors had, it was because that's what I asked for. Also, referrals from suppliers. Do they give referrals? Customer referrals? Do they have point of purchase displays, marketing support, sales rep support? All these are very important in terms of support and the vendor helping to sell the product. If a vendor doesn't help sell a product, then it's probably not going to be a good relationship. How flexible is the vendor's credit department? This is very important during difficult times. You want to know and you want to be able to get an extra 30 days if you need it. And the vendor needs to be flexible. If the vendor's credit department is strict and by the letter of the law, that's probably not a good situation for you. What products do the competitors sell? You might have a problem if a competitor, a really important competitor, sells the same product that the vendor is selling to you. You might want to have something different. And you might want to put some pressure, if depending upon the volume that you're buying, you might want to put some pressure on that supplier not to sell to that competitor. Can orders be canceled without penalty? That's very important. To me, that's a must, another must. I don't pay restocking charges and I don't pay any cancellation penalties. Looking for the best price is obvious, but understanding where the quantity discounts or price breaks are compared to other suppliers is important. Some suppliers offer free freight, so if you're not getting anywhere negotiating prices with the vendor, ask for free freight. Understand what the turnaround time is and how quickly you can get product once ordered. Clients with cash flow problems need to time their inventory receipts more precisely, so turnaround time plays a greater role. What are the minimum order quantities? Once again, this plays more of a role with clients with cash flow problems because sometimes you just need small quantities. It's very important that a vendor stands by their product. If something is wrong with the product, either quality-wise or technically, the client must have assurances that the vendor will issue proper credit upon the product's return. Understand what the vendor's restocking fees are for product incorrectly ordered. Like I said earlier, I don't pay those. Unless the client is in an industry where there are a lot of special orders, vendors should always waive restocking charges. Efficiency in handling the product is important for the receiving department. Remember, anywhere you can save costs throughout the entire process must be considered in the decision to purchase with a supplier, from logistics to manufacturing to merchandising and packaging to how efficient the product is to use. One of my clients is in the insulation business, and although Pink Panther insulation is more expensive, it is much easier to install, making up for any increase in the price of the inventory. The type of support that you get from vendors to help you sell the product is a big plus, whether they are free displays, marketing materials, or co-op advertising programs. These programs tell you that the vendor is really interested in working with you. In the event the client runs into a cash crunch, it's always nice to know that the vendor is willing to work with the client and that their credit policies are flexible enough to work through shifts in the economy or industry downturns. Another consideration is what the competitors sell. Sometimes you can work a better deal with a vendor who is not with a major competitor because that vendor does not have much market share in the market the client serves. One last rule is never overbuy inventory, as it is one of the most common reasons why businesses get in trouble. This is especially true for retailers, manufacturers, and distributors. The flexibility to cancel orders without penalty helps prevent you from overbuying. Thank you for watching this video. If you like this video, I have 19 other short, free videos just like it available for download. All you need to do is go to www.nextstepcfo.net, click on the link that says free videos, and we'll download those to you immediately. I look forward to helping you.